Good morning, everybody. And hope you're excited to be here today because we are excited to be with you. We are this morning going to review the SBA Export or International Trade loan programs with our representatives from the Small Business Administration. Just to start off, my name is Beth Smith. I'm with the Small Business Development Centers of South Carolina. And with me today is the rest of the export consulting team, Scott Bellows, who handles our government contracting team, Earl Gregorich, who's with our SBA district office in South Carolina. And then our featured speaker this morning is Miguel Penaloza from Washington, D.C., who will be reviewing all of those SBA loan programs with all of us. For just a brief moment, Miguel, before I turn it over to you, I am going to share the a short little presentation I put together for those who may have never heard of the South Carolina Small Business Development Center. Our letters are SC SBDC. I know that's a mouthful, but that's what it stands for. And then there are 6 of us in the consulting team for the state of South Carolina who focus on international trade. So if any of you are importing or you're at a point where you would like to export products or services that you have, any of the 6 of us would love to help you. And let me just show you real briefly what we do, because I'm going to do this very fast. This is the team, and we are located throughout the state. You can see there's a couple of us in Columbia, 1 in Charleston, 1 in Orangeburg, and then 2 in the upstate. We do 4 things to help business owners get ready for import or export. The first one is just to assess whether or not they can even take it on. The second is we help them put a business plan or at least a checklist in place of all the things that you're going to have to do to comply with regulations or to secure funding or to work with international buyers or sellers. So we walk you through all of that. And as we do that, we connect you with a variety of resources that are available at the state and the federal level to help you. The third thing that usually comes up is money. You know, where are we going to get the money to create more inventory, or how do we get the product from the end of the factory line into containers and down to the port? I mean, how do we get the money to do all of that? And we will work with you on that. And then last, of course, is strategic introductions. Those could be public or private sector. It just depends on your business and what you're trying to do. So this is, we do a readiness assessment. We do feel that businesses who are more than 2 years old typically do a little better with both the importing and the exporting. And we will also look at your financial statements so that we can see how well you're currently running your business. Because of course there are risks in the international market. We want to make sure you're good to go with that. Then, as I said before, the business plan really covers 4 things: how you're going to manage the process, who you know in your target market, and what you know about product registrations and labeling and logistics and pricing. The third one is, what model are you going to use? Are you going to just hire a distributor? Are you going to joint venture? Are you going to put your own office up in some foreign country? You know, which way are you thinking you're going to distribute your product or your service? And then, as I said before, the money part of that, so that we can make sure you're solid as you go to the international markets. We help people with record keeping. We find sometimes they have some of the data, but not all of the data. And as you work with lenders and the SBA or Ex-Im Bank, you're going to find that they need very clear documentation. Because when the SBA and Ex-Im try to provide guarantees to the lenders for the money that you've borrowed, they've got to be certain that we know who you are and that you're going to repay the loans. We help folks figure out their financial strategy, what documents they need, and then we connect them to whatever resources make sense for what you're trying to do. And I've kind of talked about that. And I'm going to let Miguel talk about that and this and this. How about that? Did I do pretty good, Miguel? And then on Exim Bank, who is not with us today, I just want to mention that they also have some financing programs, but they're well known for the credit insurance for shipments and making sure that they are going to be paid by their foreign buyers. Sometimes there are some grants available that we can use to offset some costs. Those are kind of annual. And they're determined in some cases by either the Department of Commerce here in the state of South Carolina and the SBA, that is their partner. And then there are some unique grants, depending on the product you have, that could come from the Department of Agriculture. So again, this is why you need one of us to sort of listen to you and figure out which resources are the best ones to help you get your product or your service to market. And then these are folks that we introduce you to, which I can do individually with anyone after this call. So we collaborate with everybody. And in this case, I just simply want to turn it over to, hang on, let me get out of this one. Back to my dear friend Earl for just a minute. Earl, could you just introduce yourself on behalf of the district office here in South Carolina?
Certainly would be happy to. Thank you very much. I'm Earl Gregrich. I'm the Outreach and Marketing Specialist for the Small Business Administration here in South Carolina. I cover primarily the upstate, but you might see me out and about in other areas, primarily 21 counties up here. So if you're anywhere from Chesterfield to the Georgia line down to Johnston Edgefield, you're probably going to see me out and about. And my primary duties are to connect the dots, as Beth was talking, making sure that you get in front of the right people and make sure that those people are doing what they need to do to help small businesses. So you may see us out and about pushing on the Made in America initiative, manufacturing. We're also trying to get our lenders re-engaged out there in the field as well. So it doesn't have to be center of population. We are out and about in the rural communities as well. So happy to be here today and support what's going on here with exporting, and look forward to the program. Thanks.
Thanks so much, Earl. Now I get the opportunity to introduce my very good friend, Miguel. Love working with you, our Export Trade Finance Manager for, good golly, Miguel, you have so many states, but kind of the middle Atlantic in the South. And so South Carolina is very lucky to have you as their resource when it comes to figuring out which loan program would make the most sense, and then which lenders we can partner with. So it gives me great pleasure to introduce to everyone this morning, Miguel Penaloza. Miguel?
Yes, thank you, Beth. Pleasure to be
Good
here with
morning,
you.
my friend.
And hopefully you hear me loud and clear.
Yes, sir.
Appreciate the opportunity. I think the SBA's relationship with the Small Business Development Centers is really key and critical. And as it relates to small businesses, usually my first suggestion to them is to go sit down with your Small Business Development Center, with Beth and your colleagues. Because really, you guys are hands-on. You're the first port of entry in terms of working with a small business to make sure that they got basically all their information ready before they go talk to an SBA lender, and that's so critical, as we'll kind of review here. So I enjoy these opportunities to kind of discuss how this kind of ecosystem comes together, how the SBA fits in, obviously, the SBDC, how we can all be here to support small businesses, which is what this is all about. Getting small businesses, starting small businesses, increasing their activity. I think 98% of businesses in the country are small businesses, and they're the backbone of the economy. So we want to make sure you have all the resources necessary to grow. I joined SBA about a year and a half ago in the Office of International Trade. That's now been expanded to include the administration's new focus on manufacturing. So we're the Office of Manufacturing and Trade, and I'll talk a little bit about that. We'll spend some time on exports, but there has been a lot of activity inside or outside of just export. So I kind of want to take a high level view of SBA for those who maybe haven't worked with SBA to make sure everyone understands how to engage with the SBA loan programs. So with that, and so you should now see just the title side, small business access to capital, which is where I kind of sit. Again, looking at SBA in general, there's kind of four pillars that I like to highlight as SBA. One is the different counseling and training that SBA does in-house, but also with our partners, the SBDCs, where we partner with them. SBA, we have about 68 district offices, including those in South Carolina, where we have staff engaging with small businesses. The second pillar here on the disaster relief, which I hope nobody has to ever use, but companies and or individuals who do suffer loss due to disaster can apply for SBA funding, low interest funding. That's the one area where SBA actually does direct financing opposed to working through an intermediary like a bank or a non-bank financial institution is on the disaster piece. The third column on federal contracting, small businesses interested in engaging on federal contracts work through the SBA. We have different certifications, women-owned businesses, veteran-owned businesses. We have a business development program, our A-to-A program, to help companies that are new to the federal procurement space, help them grow over the years. And that can be a really powerful tool. And then that last column where we'll spend our time today is on that capital piece, access to capital. So, we here at SBA spend a lot of time thinking about how can we increase small businesses' access to capital. And usually what that looks like is, really most of the time I interface with lenders, with our lending partners. Obviously, the United States, we have a very mature, robust banking system. And if a small business can get a loan conventionally by going to their bank, that's great. The system works. But there are situations and times where, the risk of a small business, it might be a startup. It might have had some tough years, or the amount of financing the bank's willing to give might not be sufficient, and that's where engaging with the SBA and the guarantee. So the lender will actually engage with SBA, get our guarantee. It gives them additional comfort, lessens the risks, mitigates the risk, so that more lenders can do more loans to more small businesses. So that's essentially kind of the way that we work. And when you think about, situations where an SBA guarantee might be helpful to a lender so that they can go out and do more loans to small businesses. Here's a list of different circumstances. So for the most part, lenders do underwrite these deals, even when there's an SBA guarantee. They're going to underwrite a deal to get comfortable with the repayment risk. And usually what that looks like is looking at the historical financial statements and or projections to feel good about the cash flow that's being generated by the business, and it's going to be sufficient to repay the loan. So that's kind of the base level. But there's other circumstances that might require or incentivize a lender to go out and get that SBA guarantee. Potentially they've already kind of hit their max in a specific sector or with a borrower, but now with that guarantee, which usually oscillates between 50 to 90% of the risk SBA is willing to take, that might unlock some additional liquidity or capital for a specific customer. In terms of maturity, potentially at a conventional level, a bank usually only goes 3 years on a loan, but through SBA, we're able to back loans anywhere from 10, 20, 25-year loans across our term loan product set. So that might be a situation where now the bank is more comfortable going longer term on a loan. As we'll talk about in our working capital solutions, sometimes the lender will only be able to lend maybe 30% of the value of inventory that a company may have. Well, through our guarantee, we allow them go up to 60%. So that's another opportunity for the lender to lean in, open up a little bit their risk appetite, the amount of capital that they're deploying to small businesses. We'll also touch on briefly today PO contract financing, where you actually look if a small business has a large contract or purchase order that needs financing. We have tools in our loan programs that allow the lender to use that contract as the source of structuring the line of credit. Collateral. A lot of banks will want 100% or even more collateralization for a loan. One of the unique things about SBA is we're very specific that we don't want a lack of collateral to be the main reason or the only reason a loan is declined. So we do ask the lender to go out and try to fully collateralize the line, but if they're not able to, that should not be a reason why the loan is not approved. So we do allow the lender to move forward with loans that might not be 100% collateralized. I mentioned, startups and projections. A lot of banks just don't want to take that risk, but now if we can remove 50, 75% of the risk of that loan, they're going to be much more likely to go out and do more loans with more small businesses. So that's a little bit of the idea here, how our guarantee is helping more lenders engage with more small businesses, getting more capital out there so that again, our small businesses can grow, start and grow as needed. So this loan, just for those who might not be aware, start kind of on the bottom there. We do have a microloan program for companies that are looking for 50,000 or less in lending. Our microloan program and micro lenders may be a great solution, and you can find a list of those lenders on our website. For construction firms that need surety bond instruments, we do have a guarantee there that lessens the financial requirements for a company to secure a surety bond. So if that's something you're interested in, you can also find information on our website or through our district office. But the two main programs where we engage with most small businesses and their lenders is our 7A and our 504 program. Let me just briefly start on the 504 program. It's a very unique structure, and if you look at the pie chart there, you'll see that SBA and our guarantee is really only engaging 40% of the total loan size. And this is usually used for longer term fixed asset investments. We see it a lot, especially for transactions or projects where there's purchase of real estate or building up large installations, usually loans, longer term loans, 20, 25-year loans. It does come up occasionally for equipment financing which would be at least 10-year loan term. But what's interesting is this structure where 40% of the loan is structured into a debenture, kind of a bond product, where the SBA guarantee is put into the program. What's interesting about this is our max loan size usually is about 5 million. For manufacturers, we can go 5.5 under the 504 program. But when that's only 40% of the total loan size, there's small businesses out there that can get up to a 12 or 13 million dollar 504 loan, where SBA is guaranteeing 40%, 10% is usually a down payment on the loan, and then 50% is treated kind of as a conventional mortgage or loan. And what's great about this program is we see small businesses being able to lock in interest rates well below current market rates. So we're currently seeing interest rates just north of 5% for these 504 loans, which is considerably lower than prime rate right now is about 6.5, 7, and lenders put in their extra interest rates. So this could be a very powerful tool again for those longer term big investment opportunities. Now, the majority of our loans are under our 7A program. 7A program, I think we work with over 1,000 commercial banks around the country. So it's very possible the bank that you currently work with has an SBA department that knows how to use the 7A different loan programs, and we'll touch a little bit on the different programs there, more for small businesses, just to understand that through the 7A program, the lender can get this guarantee and gives better chances, increases the likelihood that they'll be able to approve and provide loans to your small business. And usually in the 7A program, we're seeing everything from equipment financing. Again, that's usually a 10-year loan to buy a new piece of equipment. The 7A can do real estate loans similar to the 504 program, 20, 25-year loans to buy a plot of land, build a building, this type of investment. We see a lot of debt refinancing. So a small business has a loan from 4 or 5 years ago and you're paying 7, 8% on that. And if you refinance it, you're going to be saving 10% or more on your debt expense. That would unlock the ability for the lender to be able to leverage the 7A program for that. And also on the change of ownership. So trying to buy another business or expand your current business, that can also be handled under the 7A program. And that's usually a 10-year loan as well, anytime a change of ownership. And I should highlight there the little pie chart there. You'll see there, this is a little bit more straightforward where the bank will make a loan. And again, they apply to SBA. So we're essentially giving the bank a guarantee on 75% of that loan. And now they really only have to account for and get comfortable with the risk on 25% of that loan. So unlocking a little bit of their ability to provide more loans. The last bullet point, I want to spend a little time here. This is an area SBA is spending a lot more time is on lines of credit for small businesses. We really see this as a very, very important tool for small businesses. Currently, I think less than 10% of SBA loans are for lines of credit. And we'd like to see that grow. Just again, a powerful tool. Having a good line of credit for a business can really be critical, can be a lifesaver, and just a strategic asset in different situations. For example, if you hit different economic headwinds, a certain surge in costs, it's nice to have that line of credit available to you to be able to draw on when needed. And I'd remind those small business owners, a line of credit can work like a kind of like a credit card where you can draw on it when you need, but then when you do make the money comes in the door, you can pay it down. So you're not paying interest on that every month like you do on a term loan. So if you don't need the money this month, why be paying interest on it, right? But when you do, you can draw on it and you have that available to you. Other situations, you like to offer 30, 60 day payment terms to your customers. So you're spending money now, but you're not going to see the revenue for it for a month, 2, 3 months. So that's where a line of credit can kind of bolster you, provide that support to you as you're going through that kind of conversion cycle from, the expenses that you're incurring until you're going to see the revenue. And there's some other flexibilities there for more established companies that we'll talk about right now in terms of leveraging your trading assets, which is your inventory and accounts receivable, and using that as a source of liquidity and additional capital, as well as I touched on earlier. If you do have a large contract or purchase order and need some working capital now, a line of credit could be a great solution for that. So on that same kind of topic of working capital, as you can see here, I've kind of grouped here the different boxes are really kind of how the lenders look at a company, how they might structure and size a line of credit for a company. And those are kind of the first box is the most simple approach, an open revolver. We kind of call these the set it and forget it. Usually a bank might just underwrite a company's financial statements, historical background, or even based on projections and get comfortable with what the working capital need is, the cash flow that's going to be coming in the door, and be able to pay that down. The second is a little bit more complex in the sense that now banks, will be looking at a company's, the fixed assets they have on hand, get comfortable with the value there and see if they can build a line of credit or working capital solution based on that fixed asset value and availability. And then you get in, as we're going to the right, a little bit more complex on this side. And you can see on the bottom the monitoring requirements. So as we go to the right here, the requirements on the business as well as on the lender will increase in terms of the amount of information that's going to be required, not only at the outset of the loan, but for the borrowing-based solution, this is usually monthly reporting that a business will do. They'll send the bank information on what their current account receivable levels are. So pending account receivables out there, those have value, and lenders can lend based on the future value of those receivables. But that reporting is very important, and the monitoring required from between the lender and the small business. But as you see there, we have a bunch of different programs that can be leveraged using this borrowing-based solution. And then the project is kind of that transaction where you have a contract or purchase order. We're trying to provide the financing that the business needs, the costs it's incurring, and then when the payments come in to kind of pay down the line, and we have some solutions there. So, I always tell small businesses, don't worry about the specific programs. Really, what we want to do, and what's so important with our partners at the SBDC, is to sit down, understand what is your financing requirement. How is that loan going to turn into, financing down the line? And then based on that, we can kind of back in or try to understand which of these programs, which of these approaches might make most sense. And then that's where we kind of then sit down with the lender to talk about how these may work. We like to start with your current lender, but it's very possible they might not be engaged or currently working with some of these different solutions. So that's where, working through myself and the district office, we can try to, if your current lender isn't able to leverage some of these tools, maybe find a lender that is familiar with these, and we kind of think of these as tools. So you want to have the right tool available at the right time, but that's something we can help you and the different lenders navigate. Briefly, kind of just diving in a little more in depth on the working capital. We launched back in August 24 our working capital pilot program, which we think is one of the leading working capital solutions. What's really interesting about the working capital pilot program is it can host both domestic as well as international transactions. It's the first SBA solution loan program that can host both domestic and international. Previously, and I'll touch on this, we have our domestic programs, which is the majority of what we do, 7A, 504, etc. We came out in 2010 with some loan programs that are really kind of more specific for export only activity. But this new WCP solution, again, can kind of host both activities. And under the WCP, and we touched on this earlier, we have this kind of asset-based approach and the transaction-based approach. So the asset-based, again, established firms that have a steady pool of accounts receivable and with the lender. You can use what we call those your trading assets. We can use those as a source of additional capital to help size the loan. Again, through the borrowing-based certificate, the information you're sending on a quarterly or monthly basis, the lender has a formula. So they look at the value of those receivables and of the inventory, and they can lend money based on that. And in the way the SBA guarantee can be valuable is, again, maybe on a conventional basis, the lender might only lend, let's say, I think I mentioned this, 40% of the value of inventory, but through SBA, we allow them to go up to 60%. So that might unlock an additional 20% of the value of our inventory that could be, made available through the working capital pilot program, or receivables. As we note here, we can do up to 80%. If you're dealing internationally, you have a letter of credit or export credit insurance from Exim, we can do, we let the lender lend you up to 90% of the value of that receivable. So you're now able to benefit from monies on these receivables that are still pending through this line. And then on the transaction-based approach, very interesting in the sense, if you do have again, purchase order contract, we work with the lender to get a very clear understanding, what are your costs, usually labor and supplies, to start working on that purchase order or contract. And they'll need to know just very specifically the schedule, the vendors that you're making payments. So they'll be monitoring as you pull down the lines and make the payments. And the real key component here, because that contract then becomes essential, kind of the key collateral piece for the lender and SBA. As the customer makes payments on that contract, we require the lender to pay down the line first. They usually do that through what we call a controlled account, where the borrower can't go in there and draw without the lender's approval. But we ask the lender, when the monies do come in after you've paid your expenses, pay down the line first. But could be a very powerful tool. Again, for more established firms, we kind of see the sweet spot for working capital pilot programs for lines of credit in and around $1 million, just given the additional monitoring required by the lender. We do have for working capital solutions or requirements of under $1 million. We have our express solution and in other ways that we might approach, which don't require that much hands-on activity by our lenders. But just wanted to highlight this since it is a new program and it could be beneficial to some of you out there. I mentioned also with the new administration's focus on supporting manufacturers, and I have a few slides here at the end just to if there are manufacturers listening, make sure you're aware of the different initiatives and flexibilities we've highlighted. But one of them was launching our manufacturers revolving credit, or the MARC. And what's great about the MARC, it's a very flexible, easy to use loan program for our lenders and for our manufacturers out there. By manufacturers, we're talking about any business out there under the NAICS code 31, 32, or 33. And what's great about this, more on the lender side, is they can really kind of underwrite and approve this loan simply based on a company's ability to repay the loan, what we call the debt service coverage. And as long as that's 1-to-1 in terms of what their earnings are and that ability to repay the current debt load of the company, that's really the main trigger that we're looking at for the bank to look at and potentially monitor if they do a revolver. The loan can be established. So some businesses out there, when it comes to working capital, which this MARC is specifically for working capital and working capital only. Some companies say, you know what, just give me a chunk of money, what we call permanent working capital up front, and I'll pay that down kind of as a standard loan. And this loan program can do it that way. But if you do want that more revolver type structure where you're drawing on it when you need money, but you can pay it back when you do get the money through the door, and that way you're not paying the interest, it can also be structured that way as well. So some flexibility there in terms of how how the line can be structured and the capital deployed to those manufacturers out there. Again, specific for manufacturers, NAICS 31, 32, 33. I think I touched on most of this. Working capital only, 1-to-1 debt service coverage. Pretty straightforward collateral requirements. We work with our lenders. If it is a revolver, we do require the lenders just to do a quick check on the financials at the end of the year, make sure everything's still tracking the way it should be. If not, usually what the lender will do is term out the loan, basically set it up as a 10-year loan to repay over the next 10 years to give a little more flexibility for the business to be able to pay down that line. Flexibilities we give them, especially if they're structuring it as a revolver, which requires a little bit more hands-on monitoring and by the lender, we give them different opportunities to recover some of their costs through some minor fees they may put into the loan. Now, in terms of export specifically, as I mentioned back in 2010, we launched our export loan programs. Currently, these are the 3 export dedicated loan programs. We have our Export Express solution, our Export Working Capital, and the International Trade loan, which can be great tools for those businesses out there that are starting or already have an export base. And by export, typically what we mean, again, this could be for goods and or services. It's usually you are a U.S. company who are invoicing an international client. That's really kind of the key. U.S. company billing a international client. That's usually kind of the direct export that we would see. I would note that under these programs, we also allow indirect exports. So you're a U.S. company. You may not be exporting, but you're selling to another U.S. company who then takes your widget, gadget, or product, and then they include it in their own, and then they export, even though it's one step removed from the direct export. We call that an indirect export, and that could potentially unlock some of the benefits of these programs, which, you know, what are the benefits here? Well, the government realized anytime that a small business is starting to engage with international markets, there's that additional layer of risk, complexity, international clients, less information. So just basically additional risk. So how do we help lenders and small businesses get over this additional risk was through these loan programs, which provide not the standard 75% guarantee, but up to a 90% guarantee on that loan as a way to further incentivize and further unlock capital for companies that are out there in the export business. There's a bunch of U.S. federal agencies. We're very much focused on trying to help U.S. firms go out and compete for some of that, global revenue. If there's so many other customers, I think 80% or more of the global market is abroad. So there's a lot of opportunities for U.S. companies to go out, win some of that international pie, and support U.S. jobs through selling internationally. So SBA and a lot of other agencies are out there trying to incentivize. How do we make it easier and encourage people to go out and meet that international risk head on? And again, for as it relates to loan programs, this is what we have. The Export Express program for loan under 500,000. The key here actually, as long as at least 70% of the loan proceeds will be helping the business go export. And this could include development activities. You need some working capital to go travel and do marketing and be able to engage for the international markets. That could be a potential good use of funds under the Export Express program. It's similar to the Mark in the sense that it can be set up as a term loan or a revolver, whichever one makes most sense. So an interesting program there. The Export Working Capital, this one works the same way as the Working Capital Pilot Program. Basically, for the new Working Capital Pilot Program, we took the structure of the Export Working Capital Program and just removed the export requirement from it. And I did mention the Working Capital Pilot Program can do any mix of international and domestic. So we're seeing a lot of companies just kind of going the Working Capital Pilot Program and doing their exports there. But if there are companies out there that have a substantial amount of export and need a line of credit around that, the Export Working Capital solution could be a great fit, again, where you have a steady pool of international receivables or inventory destined for international markets, or a large purchase order or contract with an international client. This could be a great solution for you. And then the most popular of the three programs, the International Trade Loan. This is the term loan solution for small businesses out there engaging with exports. The key requirement here for the International Trade Loan is the monies need to help start or increase exports for the small business. So it can be, we're going to take this money, this is going to help us build this new plant. And with that new product, this new plan is we're going to have a new customer internationally. Even just having one new customer would unlock the international trade loan, again, giving a higher guarantee to the bank, making it more likely that they're able to move forward with the loan. For those firms that are already exporting, they could use the money, but they need to evidence that they're going to be able to increase their exports. There's some new clients or a new, the loan proceeds are going to help increase their exports. And that's usually done evidenced through an export business plan. Very simple. Just a few pages is fine. I believe our colleagues at the SBDC can help work on this, but that's where we would just document how the loan proceeds are going to lead to more exports is the key kind of tie in here. For those of you newer to the export program, not really ready to take on a loan and be repaying monies, but just kind of want to dip your toe, there is a grant program available. Beth referenced this earlier. The one SBA helps administer is called the STEP program, the State Trade Expansion Program. It's technically administered at the state level. So the South Carolina Chamber of Commerce is the state level entity you would engage this. But this is usually if you were looking for a grant, which is great because you don't repay the grants. You do need to spend some time, documentation, these type of things. But usually I've seen loans somewhere between $5,000 to $10,000 to go out and take that business development trip internationally, or update your website or your company literature to be in a different language. Engage with our colleagues at Commerce. They have a gold key service where they'll go hold your hand, take you to a foreign country, introduce you to potential clients there. There's a cost to that. This grant money could be used for that. So if you are interested in potentially applying for this export focus grant, please do so. And you can find more details on our website or again to the South Carolina Chamber of Commerce. And just wanted to touch on some best practices here for small businesses. Just on the general eligibility side from the SBA, you must be a for-profit business. Small as it relates, usually we look at revenue or employee size, but I think 98, 99% of businesses in the country qualify as small businesses. We do require 100% U.S. citizen or naturalized U.S. citizen ownership of that small business. And any owner with more than a 20% stake in the business is required to provide a personal guarantee on the SBA-backed loan. So just kind of some general eligibility issues. Now more on the bankability, as I referenced, these loans, which are made through our partners, we need to get comfortable with the risk, right? There is going to be evidence of reasonable assurance of repayment. So how do you as a business prepare for that? Well, one thing is you reach out and work with your SBDC, but you have a well thought out and established business plan. You have a good sense of, okay, how much money do I need? How am I going to deploy it? How's that going to look in terms of future revenue, in terms of my projections, right? Never go to the bank and ask them, how much will you give me? You need to have a very specific plan. As it relates to international markets, you'll even have just a little bit more information, and there's a lot available online through Commerce and other parts. This is the market, this is my customer. There's way to mitigate the risk, like the export credit insurance, which is insurance on your receivables. So if for some reason that customer doesn't pay you, assuming we're not talking about, you fail to deliver, that wouldn't apply. But if they just don't pay as they're supposed to, that insurance kicks in, you get paid. So that's a great way to kind of remove some of the risk. When you do that, your lender is able to lend more. So when we're talking about lending against receivables, when you have that export credit insurance on it, they can lend up to 90% of the value of that receivable, but really just giving you peace of mind and being able to provide terms to your customers and things like that. Having that credit insurance can be very helpful. Before you're going to go talk to a bank, they're going to ask for a lot of documentation, your financial statements, tax records, all this type of stuff. So you want to have all that ready to go. For the more sophisticated programs like the Working Capital Pilot Program, again, if you do have someone in your office that can help provide the borrowing base certificate or other information the bank may need for a line of credit, that type of thing is also important to make sure you're ready to provide if and when needed. So So again, it's just some work that we do on the front side before we sit down and go talk to banks to make sure we start off with our best foot forward, and we've really thought about what is my financial need, how am I going to deploy it. You have the plan ready to go, and then really applying for the loan, getting the money is just almost an administrative step where you're just um, ready to move forward and have everything ready to go. Now, I will say it's always helpful, especially if you're looking at some clients or a big project coming up, and you're going to need that working capital for example. It's good to, because an application to a bank could take, up to a couple months before you're able to get the money. So preparation and getting the ball rolling early is always beneficial. Starting with your current bank's a great way to go, but if you need to go talk to some other banks and see how they might work with you, that can be done as well. I've mentioned the SBDCs as kind of resource partners, if you need support with the business plan, with the financial information, projections, all this type of thing. There are some other entities there focused on women-owned businesses and veteran-owned businesses. The USIAC's there, which is short for United States Export Assistance Centers. That's really where our Department of Commerce colleagues sit, and they also can be a great tool to help understand international markets, the opportunities and risks that exist, and to actually get hands-on engagement with these markets. So if you are interested in export markets, definitely plug in with your local USIAC, and you can go to that link that's there and see in your zip code which of these different resource partners are close by. But definitely with the SBDCs there on top is usually where I point people to go first and foremost. Again, hopefully we can leverage your current banking relationship. Most banks do have a relationship with SBA. It's very possible, however, that the person you talk to at your local branch might not really know how the bank engages with SBA and what additional flexibilities that might provide. So you should work with the SBA district office or myself. We can kind of identify within your bank where the SBA department is, because sometimes they're centralized. They may sit out of state. So we want to make sure that we plug in with them so that they can look at your loan requirement through both their conventional lens, which is what they always do, but also again through that SBA lens with that extra guarantee. If we apply that, how might that change the equation or the outcome? So we can help with that in terms of understanding, how your bank already engaged with SBA, make sure you're plugged in with the right people. But if for some reason, your bank doesn't currently work with the SBA or isn't currently offering maybe one of these loan programs that might be a perfect fit for you, especially on the export side, that's where we can provide introductions to other banks so you can talk with them about your financing need. And we do, some personal introductions. And we also have our lender match tool, which is on our website for just general loan inquiries. This actually pings our nationwide network of lenders, which includes kind of online lenders. They don't have a physical presence anymore, but they do offer a lot of SBA-backed loans. So if you're really open to a relationship and really just looking for the best deal, you could hit this lender match deal tool and get pinged, and you put some information on your company and your requirement, and then probably start fielding a lot of emails back from different lenders. So keep this in mind as you're ready to take that last step of actually engaging with lenders on your loan request. And just to round out the conversation today on the manufacturing piece, again, the administration really focused on kind of twofold. One, trying to help reshore our supply chain here to the U.S. And as part of that for manufacturers as well, ensuring that they can engage internationally through our export loan programs. There's some other initiatives there, for example, trying to cut red tape. So if you're a manufacturer and there's some federal bureaucracy, let's say, some really large application forms, which are just taking an exorbitant amount of time and effort. That's potentially something that could be highlighted through our red tape hotline that you'll find on our website. We work with our federal partners to try to decrease the bureaucracy there, or the time needed to get through some of these federal you know different kind of portals or whatever it may be that you're dealing with. So keep that in mind. On the access piece, so actually before I get to capital, I'd highlight, if you're a manufacturer and you currently are looking, or even if you're not a manufacturer, if you're a small business looking for a specific widget, we put on our website these databases, which are databases of different manufacturers, in an effort. If you're currently buying something abroad, you could go to one of these databases and look to see if that same product is offered domestically. And alternatively, if you want to be listed in these databases, also recommend you go in there and you list yourself as a manufacturer, the description of what you offer, and then people can find you as well. So trying to increase the marketplace and reach that people can have to find U.S. suppliers. And on the access to capital, I mentioned the MARC program, but I also highlight this fiscal year, we've actually removed what we call the guarantee fee. All our loans, given the risk that we take, and obviously there's going to be losses, so try to ensure that that's subsidized and there's not a loss to taxpayer money. There's a small guarantee fee we charge. But for manufacturers, again, NAICS 31, 32, 33, under the 7A program, any loan under $950,000, no fee whatsoever. And for the 504 program, any loan up to the $5.5 million loans, also a 0% fee. So just trying to do what we can to make it easier for manufacturers to be successful. So that is what I have today, and I see I left 5 whole minutes for any questions that people may have.
We'd love to entertain some questions, but Miguel, what you just went through is priceless, because you actually clarified the broad array of lending, I'll call them instruments, that are available for a wide array of small businesses to use. And we have every sector, every industry represented on this call today. So, it was really helpful that you explained the programs the way you did. And I don't know about everybody else, but I sure was able to follow. And I loved to, Earl, thanks so much. Every so often, Earl would put a link in the chat answering some questions so that everyone that's on this call today can use those links to go follow the information that you explained. So
thank you for that.
Our SBA team was incredible today. You guys are always amazing to work with, so knowledgeable, so helpful, and so approachable. And I think a lot of times our small businesses are like afraid of what they don't know. They're afraid to call us. We're pretty easygoing. But when we get to the SBA, you guys just feel so official. You know what I mean? And so I just wanted to say thank you for the very personal way in which you always relate to the small business owners in the state. Thanks for doing that. And then thank you, Earl, and thank you, Miguel. Are there any questions from those that are on the call today? We'd love to answer those.
I did see someone asking for the presentation. I will send a copy of it to you, Beth, and you can distribute it to the
okay. We can get
to the
that out to everybody. Happy to do that. I'm just giving folks a minute to think. Oh, and Miguel, I did want to only say one thing. In our state, the STEP program is actually managed by the Department of Commerce.
Department of Commerce.
It's okay, but because I know it's different for the SBA in different states, but for us here, we go to the Department of Commerce, not the Chamber, for the management of the STEP program. That's all. Earl, did you think of anything we might have forgotten that the small businesses might want to know that's state specific by any chance?
No, I think it's really good information. I think if you want to engage locally, obviously, as was said, SBDC is a great place to
Mhm.
start. Um, I'm here really to help navigate the resources here locally. I
Mhm.
added a link there for our local lender list. We also have a link that will take you to the performance report for local lenders as well. So
Oh,
not only can you see the lenders, but you can also see which lenders are lending the most. They have the most activity. So if you're ever interested in navigating that, just reach out and I will help you find that and get you connected.
Earl, that's so helpful. Thank
Yep.
you. Miguel, any closing thoughts?
No, just encourage our small businesses to be active out there, engage, ask questions, work with people. There's a lot of resources out there. We all want you to be successful, so don't be shy and go out there and you know, keep on working hard as you are. We appreciate your time. This is a great step in that direction.
Well, thank you so much, Miguel, Earl. Scott, I'm glad you were here today too, because our manufacturers are often our government contractors, and understanding these loan programs that the SBA has come up with is just really helpful. Sarah, thank you for hosting us today and for including my team also on this call. And we look forward to helping you in any way that would make sense. Please just give the SBDC a call and or SBA. We all know each other. We know how to refer people back and forth and introduce and communicate. We're not so many people that we don't know each other. So please leverage us and let us help you take your products and services to market. Thanks so much for attending today. We appreciate it. Talk to you soon. See ya.
Bye bye.